I'm going to quietly, since before people start asking questions and so on, just quickly to announce here before we announce it publicly. We have Faisal, who is joining us as one of the financial analysts, and we're just working on training him to get used to the program. He has a CFA complete charter, and he's here to get trained up and learn how we do things here. So he's just here to assist in the data room structure for all these Monday calls. So I'm going to repeat one more time again. So Abdiel, Ade, or Ken, any questions, just feel free to just pop in the chat, and then we'll, okay, there we go. We have allowed to talk.
All right, so how's it going, guys?
Pretty good.
Good for a Monday. So I have a question regarding the data room. So I was looking at some of the structure that you have in the data room. They're geared toward let's take for example the real estate data room structure. This was more geared toward development projects. So I've seen typical things I've seen in that space. Is the idea that to expand beyond development, such as maybe having one that's focused on acquisition, maybe syndication, or if not, since we talk about funds all the time, or fund of funds, or have a multifamily funds data structure somewhat related to the development or construction's current data set you have there.
Yeah, that's a reasonable point, because when we said real estate, as we were getting set up, we just said it for literally just the hardest type of real estate project, new developments. And so that was based on a JV partner that was, let me see right now. Yeah, so that one was based on the JV partner that executed new developments. They also did, so that associates who the data room was based out of, so they also did current developments as well. We can get examples on those, and tell you what, we're going to get an example on that and add it right after this call based on that. So then, yeah, so I mean, the one thing to ask ourselves is like, I guess something to look at too, we can look at is also like the initial people we're going to get that initial feedback from. Because if it's, for example, so if it's about the projects and the contracts and so on, then there's a lot of that. But if you're looking to just get like in touch with, like, I guess, get in touch with an investment, like an investment bank to syndicate it that way, regardless of the sector, there are different things that they require. It doesn't even involve the details in the real estate side. But yeah, basically after the call, I'll get an example for value add opportunities or people who are commencing funds, so we can get that. And then we can also, try to understand too, who are those initial people we're going to commence the outreach with, and then just retrofit it around there.
Right. No, that makes sense. And then in addition to that, let's say we're doing a fund of fund or a real estate fund. In the search engine, so I tried to look at a few things just earlier today. When we do the output, it doesn't pull the criteria. What I mean by that is it pulled the contact information, the AUM, maybe past investment. But when I put the criteria is in the search engine, if it's semantic and able to pull projected investment. I'm not sure if you're familiar with Care Real Estate, or I think the other one is called PitchBook, but they give you a likely scenario, what those firms have invested in the past, but likely in the next 9 months or 6 months, what they've been searching or what they've been looking to invest into. And so we can pull that matrix very easily. Is there a way to do that in the search, or are we pulling that data from PitchBook or Pair or Access? How do we go and maybe filter or drill down into mine the data even further?
Yeah, I like that question. It's one of my favorite questions. So then, yeah, the understanding what people have done based on past experience. I think that that's probably best done with because what we're basically doing. So I mean, there are a few ways. So first is, and we're going to restructure some of the portal to make things more smoother for the clients that are coming on, like next week and so on. But yeah, basically, what we like to do first is like have a few, maybe like 12 or so people that are reached out to initially. So then we get like, okay, you know, this investor says this syndicator says this investment bank says this investor says this, so we have a rough idea. And then after that, there's like just the data, and so the data just has some people that have already been vetted and everything. And then from there, the engine, as you said, yeah, it finds more people. And so yeah, because what it does, it looks at it gets so we try to understand some key patterns based on keywords, and then the types of keywords that can be associated with our mandates. It's pretty experimental in that sense. The best way will just be to we actually have a tool that is right buried at the bottom that does exactly that. It's still in beta, but it's a tool that let's see. Yeah, so this tool right here. So it does exactly that in terms of trying to understand what is somebody's mandate, and then or what is a potential company's country, the deal stage, and so on. And then it's supposed to export a CSV or like a list, or just show it here. It's supposed to export a list of firms that are supposed to be most likely based on criteria, the deal you enter here. So that's something that we're working on based on historical data. Yeah, we're just working with a few people to make sure that we're going to just send you the data directly and put it on the portal directly, so that people can understand what people have done based in the past. We're going through like a process to make sure that the whole thing is GDPR compliant and all that. Like, because we have like, I mean, I think we have like a really large amount of people in there, but and we just have to do some few checks to make sure we didn't cross any lines. But yeah, so I'd suggest playing around with here for experimental purposes. And what else here? Yeah, and just taking a look at, I'll circle back. Yep, go on.
No, okay. I think maybe you're going to talk about the last piece, which was the PitchBook piece. Are we integrated with PitchBook via API, or is the goal here as we evolve this platform to be more like PitchBook or better than PitchBook, or maybe congregate the data in a single location on Races.com platform, but we're able to do the on demand or at run report by putting in all those different locations.
Yeah, that'll be a pretty good scenario, because I mean, yeah, the API integration, like if you just have that, that would save a lot of time and leverage other people's work. But just to cut off on some initial expense, like we just source our own data from publicly available stuff, and then we put it here. So yeah, I think in the long run, honestly, in the long run would be just to have it so that we can be the cheapest person to have agents that can manually raise the capital for people, but to do it at a very extremely cheap rate. That's pretty much the goal, so that can undercut typical investment banking fees on monthly retainers and all that. Because yeah, I mean, historical mandates are one thing, but sometimes what's also important that people underestimate too are the new pieces of news that come up on new funds that have been created. Because one thing that I noticed is, even on Crunchbase, I've seen VCs on Crunchbase on really cheap. It's really cheap, and because they've emerged new, or like there was a new announcement, sometimes like they're actively looking for more deals. And there's some free places that I've seen that they post their new deals. But a lot of the time, the historical action, you're looking at some perennial, like some retirement fund or so on, and they don't really, like, there's so many barriers, so many people in the way, and so on. So what I would do is
yeah, no, you can finish your thought. I didn't want to cut you off, but
oh, no worries. Yeah, what I would do is, like, I think for quick replies, like the new news is usually, like, just based on what I've seen, like I could be wrong, but I've seen new replies, like new people that have emerged and new funds that have been announced and so on. Those guys are really hot in terms of replying to inquiries that they don't recognize.
Correct. So I think you just showed based on what I was going to mention, and I think also as part of that too is typically with family offices, that are funding new funds or new investors, if you're bringing the deal or you put them together or whatnot, what I do notice is that they are very they are very steadfast on the mandate in terms of not well in the mandate cycle. What I mean by that is if they only invest in development project and they only invest um, in the last quarter, in the third and fourth quarter of the year, it doesn't matter if the deal is very, very good. They simply don't look at it because it's not part of their cycle of investment. And then sometimes they also invest
Oh,
in the
interesting.
in the first quarter of the year because the mandate only allow them to invest in Q1 and Q2 because the fiscal year, and especially here in the US because of taxes, right? March 31st is when all corporate taxes are due and you have personal taxes. So they typically try to get their fiscal year start on May 1st or June 1st, and then they loop that into their mandate cycle or investment cycle. And so I've not quite found anything in the real estate side that's actually very clear. Again, I've not used PitchBook at length, which I've heard good things about, but I've used Pair and Axis in the manufacturing and then especially airplane leasing or transportation sector. They're very bullish into that aspect, and I've seen a lot of really good data. I just don't know if there's anything out there yet for real estate. So that's where I was going to go with the question here.
No, got it. And yeah, I mean, what's funny is that we found ways, like I guess through the past, I've used like pretty much all these tools that cost more than 15,000 and played evolved, and then there's kind of like yeah, when it comes to, I think when it comes to either the hard money lenders or the family offices, I think that that's where you get the hot information. But we like to say we use our own ways to get some new people, and so yeah, because so what you're saying, you're finding is that it's really cycle driven, and then you'd like to just understand what are the last, I guess when and what announcements were made in what time, so that you can understand when is the best time to strike. Typically, I mean, they're sending term sheets at like the term sheets are usually like 2 months. Like I've seen, maybe they do it differently. I've seen term sheets 2 months to 3 months. So I mean, if one can some new people, and so yeah, because so what you're saying, you're finding is that it's really cycle driven, and then you'd like to just understand what are the last, I guess when and what announcements were made in what time, so that you can understand when is the best time to strike. Typically, I mean, they're sending term sheets at like the term sheets are usually like 2 months. Like I've seen, maybe they do it differently. I've seen term sheets 2 months to 3 months. So I mean, if one can time everything up, then that'll make sense, right?
Correct. And I'm going to change gear on you as well. There are a lot of migrations that are going on last week, but and I also forgot to send you a note. Did you happen to have that closing document with the CPA fee table closing on the fee side of things? The example you are going to share with us.
Oh yes. So then, yeah, thank you for reminding me. So then I was supposed to send that over. Let me see if I can send it right now. I can show you right now. I think I already put it on. So then data room. Yeah, there's one that's a consultant. So turnkey data room. Actually, just bear with me a bit. Let me just dive into my email and get it right now. Just a second. All right, thanks for the patience. Yeah, so check this out. So I have a example agreement. Let me share my screen. Right, can you see my screen? This.
Yep.
Yeah, so this is essentially it. Like, yeah, so this is based on one of our consultants that we used to work with based in New York. providing quote unquote advisory services. So yeah, basically, this is one is interesting. So basically what they do, this one does a monthly retainer. But the way that they structure it, they make sure that the payments are paid pro rata. So like if a certain transaction is a certain size, then they will just keep on asking the person to pay such fees at different points in the transaction so that over time it adds up to that percentage. And the reason why they do that is so that and check and make sure you check with the another lawyer. But yeah, the reason why they do that is because it makes it seem as if their work is not connected to a potential transaction. In that which case, then the SEC could say, hey, you're unregistered. So then this is just one example to look at. I put this in the turnkey data room, but we'll get our securities lawyer to add another one, and because there are different variations of this.
Okay. All right. Perfect. I'll take a look at that then. Thanks.
Yeah, no worries. So we have, either Ade or Kenneth, any questions, feel free to unmute or ping us, and then we can assist. Oh, I just missed, as soon as I clicked on Kenneth and I saw Ade. Yeah, next time I'm just going to write them down so I can get them in proper order. Sorry about that. But anyway, Ken, since we have you, what is the question right now?
Yes, Deal, I think we got an email from your team last week, Kurt, that for our short page, our tag page, that we want to review it today. But I think he said Kurt's off, or he's not able to make the call.
Yeah, no, Kurt's right here. Kurt's right here. So I think Kurt managed to actually send over some of his review based on Saturday, I believe. Some of initial thoughts, and then should we take a deeper dive right now?
Well, we got the PPP, but we also had our sorry, name escaping me. I'm multitasking here. But we also had our one pager that I think we were still waiting to see.
Okay, got it. Yeah, exactly. So okay, yeah, I think Kurt said I would take the lead on that. So let me take the lead on that right now. So then because Kurt focuses efforts on the pitch deck, I'll focus my efforts on the one pager because I think Kurt was mentioning that I have more exposure to that, which makes full sense. So let me take a look at it right now. That's okay. And fix any errors.
Yeah, I'm looking at it. I think it's already on mute.
Okay, got it. Just making sure I'm still online here. Yeah, so let me go through it right now and make any corrections I would recommend. So executive summary, 75 million USD private placements. So this is good. I think I recommended before, we don't really need private placements because it makes it, in my opinion, it makes it seem as if, as if an investment bank is shopping it around, and then, investors would be kind of like, it's probably a broker sending it to me and chasing me. So I'd probably leave this out if that were me. And for review, let me turn on track changes so that you can track all the changes I make and approve them or disapprove them and so on. So I'll do that. So 75 million Arch Capital Fund providing security. So in the subtitle, I'll just, just simply, make it as short when possible. And I would just capitalize security and income growth for its investors and debtors alike. All right. All right, so Arch Capital. So Arch Capital is the proper noun of the fund. So then, typically what we've done, we usually just say what the thing is without including the proper nouns. That's typically how we do it. It keeps it shorter, it keeps it to the points. And then here's the introduction of the actual company name. So we'll take a look. So Arch Capital will invest in real estate and real estate-backed assets within the United States. The fund will focus primarily on large multifamily, residential, mixed use, and commercial, commercial, and sort. Yep. Investments restructures, equity or debts include various hybrids, such as participating debts and preferred equity. So tell me if this doesn't seem a bit redundant. So then, because you mentioned that you'll be structured as equity or debts. Okay, yeah, sure. This is an example of the type of debts and the equity that you would offer. for example.
I think what we're trying to convey here is that we didn't want to say debt only, we didn't want to say equity only, but when you have equity, you always have option to do preferred equity, which also gives you a hybrid of debt and equity, if you will.
Yes.
And you typically use that when you want funding to occur in unit tranches. In tranches such as on $100 million fund, you may want an investor may want to bring in 10 million, but instead of having a 3-5 year lockup period, you say, well, I would put in 10 million, but I would like to withdraw the money within 2 years. And that's possible when you do a preferred slice into the capital stack.
Yeah, exactly. Especially if you're looking for a lead. Active, so we entirely develop real estates. Okay, interesting. Yeah, so then that's interesting because it makes sense, because when you say the fund will employ, whenever you see things like this, then the team, then they'll start looking at its team. So then that's good. The pro forma estimates that fund, will generate a first year yield to investors of just over 16. Yeah, I like this because it's not too it looks reasonable. It doesn't look too scary or anything. Because the mid-teens is fine, because sometimes when you get on these, you see some of these teasers and so on. There was another debt fund we're working on. We saw something over 20% of a debt fund, and then typically we just like seeing things like this. Just kind of it's not something that is a fairy tale or anything. So this is an okay figure to start with. Arch Capital currently as LOIs and offers. I just say offers. On acquisitions and debt, because the reason why I would say offers, it looks more aggressive, and whenever somebody says LOI, it's not really anything serious. Acquisitions and debt fund within the core target industries of real estate, mixed use, in an excess of subject to successful capital to I don't even know if I would add this. I actually don't know, because so you're saying that you have offers on this. It's subject to that, but it makes it sound as if there's $0 raised, or that it's because if I'm reading this and I'm skeptical, I'll say, hey, so do you not think it'll be successful here? So I just personally just keep it like that. What else here?
Okay.
So team managing, okay, there we go. Team managing partner manages lower this real estate. Commercial. Okay, one more thing. So offers on acquisitions and debt funding within the core targeted industries of real estate and mixed use commercial. Those are industries. Real estate. There's something about this sentence. This is a small thing on the sentence, but I don't know what it is. How about this? So, real estate. Yeah, I put the noun before the descriptor. It makes it people just see, oh, it's this and this. So here we go. Abdel, managing partner. All right, that's the title. This is just small stuff, but so managing partner is experienced investor who has invested on both. Yeah, because I remember that initial call I had with you. You have invested in these properties, and that was a big part of how you got into this business, and so that's something to really kind of herald here and be proud of. So managing is an experienced managing partner, experienced investor. How about this? How about real estates? Has invested on both sides as an equity partner and a general partner. Yeah, you already say here. So it's funded. Yeah, you already say this here.
That's commercial real estate project.
He also runs capital placement. Yeah.
Okay.
So anything you could say here about transactional history too, because I remember when we were talking, like I think it was a month ago, you said that you worked on you had several, like it wasn't in the tens of millions, but you had several in, and if it's something worth saying, we'd say it here, but if it's not, then maybe not. But I remember that.
I think I think what I was conveying here is that combine smaller stuff and larger stuff, transaction, whether it's helping secure debt, capital, or exiting, then that's what the 25 million up is combined from my side, and then
Got it.
So we kind of combine everything into one. I mean, this is the last 7 years of projects that I've transacted, and then
I like that word, transacted. I think we need to include that. It looks more so invested. Okay, we use invested. Investor who has invested. How about this investor who has transacted?
Yeah.
How does that sound?
Yep.
Okay, got it. So it took a package after 20 years with JP Morgan. I'm just going to, any word above 10, we put in decimals. JP Morgan Chase is vice president. This is fantastic. So it took a package after 20 years.
Okay. Yeah. Or do you want to say that retired from JP Morgan, or you want to say?
Retired is an interesting word. Like,
well,
it's an interesting word. Perhaps, like I mean, the word retire. I mean, tell me what you think. It brings an air of seniority, experience, and so on. But then we also want to convey that I think we want to convey that there's still like a lot of activity in play. So it's kind of
yeah.
You could say he spent his he spent his tenure, or he spent his career, like he spent his after he spent a career at something like that. Because then it doesn't then we don't know. It's like, oh, retired. Is he doing anything? Is he an advisory, or is it a passive role? So just anything to make it seem. And obviously people are shallow. So as soon as you see this, then this is fantastic. So people are shallow, so they like seeing this. So I just do something like.
So to piggyback on that, I think I'm in the same situation. I have buyers, 20, 30, 40, $50 million, looking in North Carolina, Georgia, Texas. Matter of fact, looking for something in Houston right now. They're not afraid of the prevailing cap rate as long as it's a good deal. B plus, A minus neighborhood, built after preferably 2000, will go into the 1990s. And I've got 2 foreign buyers, and I've got 3 U.S. buyers. Coming from the investment side, I have a lot of investors that are looking for deals. And so
daily basis, we all get paid.
Got it.
Get paid by numerous.
I mean, yeah. I mean, these are the things that we want to sell. We want to oversell, because obviously, obviously you've been in the business for quite some time and you've done things. You've got things done. So let's put that front and center. So you have multiple buyers, and then what was the multi-prime? Got it. I don't even know if this serves you justice, so maybe we say
right.
I mean, the price is being for the seller, right? But what value you create or the buyer create out of it is a separate thing. So you really have the right questions and what kind of connect.
Looking like value add, and I've closed other deals with these guys. One for 36 million, one for 26 million. You know, secondary markets, tertiary markets seem to be where you can find some decent cap rates, like 5, maybe 6. Specifically looking for something right now in Houston. So we know the cap rates are low down there. And so, you know, generally what they don't want to do is get in the best and final. You know, so when I join the experience, like looking for off-market deals, these guys definitely have money and definitely have proof of funds. And so, you know, with EXP, I'm just looking now to see what kind of multifamily property deals that I'm able to find for these particular buyers.
Got it.
But they do close, and I've closed with them before.
Actually, it might be helpful, guys.
Fantastic. Yeah, that's what he wants. That's fantastic. So Kenneth closed
Yeah.
over, let's just say over, we can add more as we need, but in multifamily, in
So you want to say prime?
After, say again?
I was going to say, okay, you're only saying secondary market or primary markets?
I would just, honestly, I think we should probably just say focus on the assets for multifamily. So these are more value add opportunities, right?
Yeah.
I don't know if you know their backgrounds, if they're actual experts in this. So I hope you can use this on my
Spell myself.
Definitely sounds good. Looking at to the thread, very specific requirements from my buyers.
Flying differently able individuals. I sent them a slew of properties and they came back and they actually want to go bigger. So
There we go.
Nice.
Yeah, this is great. I think this is great. You should be able to get a lot of, I mean, putting, you know, emphasizing this in obviously those initial discussions, you'll be able to cut through, in my opinion, I think you can cut through a lot of the walls that are built up, because whenever there are licenses, there's experience, I think this is really a good highlight. Exits, so investors may be redeemed at the option of the fund. Interesting. After 2 years, and investors may be redeemed at the request of the investor after 5 years, or at a time. This is interesting.
But that's my challenge, and of course.
I want to emphasize here is we're able to do that because we're doing a mixture of, let's say we have $75 million, we could do 5 deals, and we also bring the debt. So we really provide both the secured side of the transaction as well as the equity multiple, which is the upside of the transaction.
Oh, got it. So that's why it's more flexible there. Do you think that's?
So
I'm wondering if we should even.
The challenge is finding inventory, and specifically like that.
I'm honestly wondering if we should put this in the pitch deck, to be honest, because
$12 million for the
yeah, because what I think would make sense too is if we can put that in the pitch deck, as in we have that in detail in our presentation or our our business plan or presentation to the investors. But when you look at most investors or syndication fund, they stick to leverage between 75 to 80%. By having this hybrid model, we're only going to transact leverage between 65 to 70%.
Oh, okay. That's a bit lower.
So the return or the multiple is our exit strategy is stronger than most.
Yeah, because you're not over levered there. You have some more space on the table for the equity people to come in. So then you say, so here you say yield 18, and here you say yield 16. So which one should we put here?
What we're trying to say here is for the 16, we said net over 16% net IRR, because most syndicators or fund, they tell you, oh, we're getting 8% IRR, but what they don't talk about is net IRR. So otherwise we could say 20% if we wanted to, right? So, but I think 16 is good. If you say over 16% net IRR is very strong. The yield, when we say 18%, so if you take into account the 2% performance fee, because we don't get paid until after investors are paid, that's where the 18% comes into play.
Got it. So then that's excluding the fee. That makes sense. And then United States. I wonder, maybe it's best to just leave it, because honestly, on the call, then we'll clarify that, or on the deck. And then the rest is just, the components on the side.
What I've seen in the past, or in calls that I've been with other partners, with family office, they tend to gravitate toward the left margin, but also those numbers speak volume, because as soon as they see it, they're gonna look for other patterns. And if they do see that, I think it's a conversation more than anything, because obviously the deal we're seeking are going to be 20, 22%, 23%, but we can't say that, and we're never going to say that. We would rather outperform versus underperform.
Oh yeah, no, you have to, because I mean, when an associate in another firm was raising for a debt fund, they said 20-something%, and then the person just said, hey, what are you talking about? They were just looked at as a joke. All right, so then tell you what, then this is I think this is a good start to commence, and then I'll send this document via the support, and then I just say here I'd look at saying in the footer, I'd look at saying, this is intended for a credit, and like based on the reg. So are you doing a reg D or a reg A plus or
reg D? Well, no, this 75 is reg D, right?
No, reg A. So here's the dilemma. Here's what we come to conclusion about. So we're actually launching two funds at the same time. We're using the reg D for accredited investors only, which will be $100 million, and then we're using a reg A, which is the same structure, which is $75 million. And we're catering to different group of investors. The benefit of the reg A, it allows us to move with no limitation in terms of except for the raise limitation, which is 75 million. But the reg A, the benefit of the reg A as well, we have multiple, even greater exit strategy, as in if we outperform and we wanted to sell off the portfolio as a micro IPO or sell it to another REIT, we can actually do a cross cross trading on the back end, basically sell off the asset on paper, basically, and then return the investor's capital, or negotiate a residual any way possible. You can do that with a reg A. With a reg D, once you exit. But also with a reg D, reg A versus reg D. For the reg A, it's going to take longer. It's going to take about 2 to 3 months to get registration to clear before we can launch on a crowdfunding platform. So while we're doing that in tandem, we're also talking to other investors on the reg D side, and then try to launch as we go, because we can start moving and laying the groundwork, but different exit strategy, if you will.
Got it. And I mean, and I suggest we have some associates. So when this is ready to go out, we have some associates. We'll connect you with Clem and some associates. They do these deals all the time. And they have the manpower to handle these. So I'd take a look at them. We got 200,000 in working capital for somebody who's doing an IT acquisition of 70 million, and the 200,000 closed in preparation. That closed last week. So yeah, so that one is a good target to commence with, and then and yeah, we're getting some more people on public markets who may be able to assist with the Reg A. So we can come back to that too. But yeah, I'm pretty excited for those two strategies in tandem. All right. So I think so. I'll send this over, and I think Ade. So I think Ade had a comment as well. Let me allow you to talk. Sorry about the waits. Hello, Ade.
Hey, hi guys.
How you doing today?
Good. The weather is great, so I'm good. Yeah, I just to make a comment before I go to my comment about Kenneth's experience. I think we need to, yeah, and I think you need to differentiate between whether he worked as a VP for 20 years or whether he left as a VP. Because what's the what you have there right now is more or less connoting that he worked there as a VP. So you just need to clarify from him whether he worked as a VP for 20 years or he left as a VP.
Left as a VP.
Yeah. Thank you. That's not a joke. So then, yeah, after 20 years, Jake Morgan.
No worries. We're all in this together.
Yeah, that's why the group sometimes the group structure helps for this reason. So,
Yeah, I spent the last 10 years as a vice president.
Yeah, okay, that's great. Yeah.
That's still pretty good. Like maybe we can just say and 10 years and curious, I'm curious of the entire title. Was it some subsector of some part of real estate? I'm curious on the title here.
No, I wouldn't put it there. I was my first 10 years was with the private bank, and on the investment side, then I went to global infrastructure. So I think so I would just put as 10 years as a vice president. Yeah.
Got it.
I wouldn't tie it specifically into real estate or investment because the last 10 years was out of the private bank, and they have mutual fund that Chase had before. Yeah.
Got it. Yeah, that's a different animal there. So after 20 and 10 years, all right. I'm really happy with this. I think this can get. I think this can get some good results, and something like this in the email with combining something here, and then I think we can get some good results. Yeah. So I'd say like to again, yeah, to introduce to a few parties like Clem, probably Cambridge Wilkinson, get this out and just push. I think you can get some good results. And so, and yeah, Abdul, I believe you actually raised your hand much earlier. So I believe was there another inquiry there?
No. I think no, that makes sense. I don't have any question.
Sorry, no, Abdul. I meant to say Ade. I mixed up the two names.
It's all right. Yeah, well, the fundraising has been rough, I would say, but I know we're in the early stages, so I'm still encouraged. Most of the outreach has been more or less saying, "Oh, we are not really interested." Some that gave a bit more detailed feedback, more or less, they invest in something like what Kenneth and Adele are putting together, something in the hundreds of millions of dollars. That our fund is pretty small in terms of 12.5 million. But on the positive side, we're able to secure, I'll say secure because more or less signing the SPA probably next week. 2 properties in Edmonton.
Okay.
A 15-unit multifamily and a 46-unit multifamily both in Edmonton. So in that regard, we try to more or less make our strategy a bit flexible in terms of people that are interested in investing, co-investing in the property rather than investing in the fund. And those are interested in investing in a fund and diversify their risk. And those that just choose, okay, I rather co-invest in a fund, more or less like a syndication kind of arrangement. So that's the strategy we're trying to employ to ensure that we close as soon as we can. If it's just probably close in the next 3 months at least, we want to get that ball rolling.
Got it. So, okay, so you're saying, so then there are two pieces here. So then you're saying you're getting some rebuttals because one of the rebuttals is because of the fund size, I think. And then another one is because of the ability so the fact that they want to invest in the fund versus just co-investing in the deal directly, right?
Yeah.
Got
I
it.
spoke
So
to
then
a
the 40
family office. Go on.
Yeah, I was going to ask, so then the 40-something units, how much does that translate over in dollars?
The 40, that's about, equity raise is just, the equity raise is just about 1.8. The total ask is about 6 million Canadian dollars. Yeah.
Got it. And then what were you saying about the family office there?
Yeah, a family office, actually, one of the principals of family office actually told me that they might, want to invest in the property instead of investing in the fund. That I should consider it. Of course, I'm considering, but I told them what we're trying to do, and we could accommodate that as well.
Yeah, I remember when I was selling a solar fund back in like another firm. I was selling this solar deal. I kept on getting these same things. We had several investors, and then they were willing to put money in if they had control over the entire thing. So it became more of like them being a co-acquirer. So
yeah,
that was something that we saw a lot. So then, is this something? So I guess two things. One is increasing the fund size. Is that something that is a possibility, or would you rather fix it? And two is, the co-investing. Would you focus on one deal at a time at the size I mentioned and focus your efforts there, or would it be continuing on a fund?
Both strategy will be employed. So if you have got an investor that is interested in investing in the fund, because the fund will keep investing in any of those properties, any of those co-investment opportunities. So whether an investor is interested in investing in the fund, that's great. If it's just to look at a particular property and say, okay, this is where I want to invest, and that's great as well. But the fund will always be part, more or less, the driver of that transaction.
No, got it. Yeah. So then so because you're doing both simultaneously, one thing I'd look at too is something that works really well.
Sorry, let me cut in. Sorry to cut in. Let me just make something clear. We're going out as a fund, but depending on the feedback that we're getting from, the body language from whoever we're talking to, then we say, okay, we could accommodate that. But we're going out as a fund, not as a syndicator. No, we're not going out as a syndicator, but as a fund. But if the pushback is saying I rather invest in, okay, we could accommodate that if it comes to that.
Got it. So then, so you're saying that you're flexible to the rebuttals, but then you're going to send out a certain amount of inquiries based on the current fund structure you have set up, right?
Yeah, the rebuttal that we got is mainly on the big boys are saying, okay, we're rather invest in something that's hundreds of millions of dollars, not it's pretty small for the appetite. But for us, of course, we could go up, but I think right now we'll probably do 20 to 25. I mean, if we have somebody that could help us write that kind of check, we try to keep it simple, keep it small, because we don't want to go out and not close. All right, I could do 100, I could do 150, I could do all that, but what's the point of going to the market if you don't close? So rather start with something small and okay, worst case, we're gonna close this. So at next one, then we could do something bigger, maybe 50 or maybe 100. But we want to go out something that is more or less manageable, something that we can close.
Got it. So then, yeah. So then I think after a certain amounts of I don't know how many were sent out. I'm going to assume probably 80 inquiries or 80 teasers. So I'd say like after a certain amounts, because we have to get information that is kind of statistically consistent. So if it's like after, let's say, you know, I think actually the amount that he sent is probably fine. It's probably an indication of where you want to continue to get. Like smaller check sizes. So how about smaller check sizes? What I guess of the people we reached out to, do any of them do smaller check sizes, or any of them smaller investors? And what's the response different compared to the larger family offices and so on?
Well, the feedback I got in terms of whether I invest in the fund was actually from a smaller check sizes. So the family office is actually based in Toronto. They've got ties with in the Middle East, and that's what the feedback I got. Even if the family office invests in the fund, they might be able to bring some, family and friends to the fund, but they rather invest in the property rather invest in the fund. For the big boys, it's just pure. We don't do that, so it's too small for us.
Okay, got it. Yeah, I'd say definitely the smaller check size, and maybe even like doubling down on the smaller check sizes. And then I think we can probably just take a step back from those larger people immediately and just focus purely on smaller check sizes. And what else here? So then the one-off acquisitions, who has had the most? So who do you have the most success with in the conversations for the one-off acquisitions?
I think it's the family office in Toronto.
Interesting. No, got it. Okay, so then I think we have a lot of data and a lot of context. Would it make sense to discuss with one of these? There's one of these investment banks that they look at 25 million and above to assist alongside you. They can take Canadian companies. They're it's Cambridge Wilkinson. They can take a look at it and then see if they can help push it. What are your thoughts on that?
Yeah, I'm open to that, but what's like fee like, because the fee has to be reasonable.
Yeah, I think they do. So I mean, I think they can do for equity. I think it's 6% on the back end, 6 to 5%.
Okay. I think we could look at that.
Got it.
Yeah,
so let's play a bit of that and then get some more context in the smaller check sizes, and then just continue going from there. And then and I guess last question here, are you advancing towards the call, or is it just before any call? Is it just like the email that they're saying no or yes or no?
Well, it's the emails. The family office we had about, I think, 1 hour chat on last week Thursday. I was actually on LinkedIn that reached out through the VA, and we got talking. And most of the emails outreach has not been that's encouraging, But most of the feedback I've gotten and the people I've spoken to has been via the VA on LinkedIn. People I reach out to on LinkedIn. I actually had another family office that I'm supposed to get back to in August, because they're just they're just doing some transition right now, so they can't really look at any deal, but they still look at it. They are interested, but that will be in August.
Okay, got it. No, got it. Thanks for the report. Yeah, so I'll send over some one of the IBs I can take a look in, as well as obviously just getting more context on the small check size and take it from there. Just keep on pushing.
Yeah, I appreciate that.
All right.
Yeah, I was going to bring his comment real quick here on Ade, I said you and I talked offline sometime last week.
Yeah.
But
Abdel, yeah.
The size, I think the size for I don't know what constitutes I don't know what constitutes a accredited investor in Canada, but the size seems like here in the US would cater more toward accredited investors or sophisticated investors, and so a couple of things that have worked in the past is working with my experience been, I think one of the largest deal we did as a GP was around, first largest deal was around 18 million. And what we ended up doing is there was a family office who came in, and the minimum investment criteria was 5 million. And they wrote a $6 million check. And we offered them, we offered to create a separate class of share.
Okay.
So like other investors may have 50K or whatnot, and then that also allows them, they wanted control, but we didn't give them control. We said, hey, listen, if you want to invest with us, we'll create a separate class of shares while everybody else is receiving 8% or 7% pref. We are going to give you 10% pref with no participation on the upside.
Oh.
And they took it. With zero management fee. So I think there's a lot of other ways you can negotiate that. But if a family office said, okay, well, we want to take control of the deal, that's perfect. As long as you retain 33-34% of the deal on the capital stack. What that means is you can still do that, but they would be signing off of the loan. They will be guaranteeing the loan. They would account for all of those, while you still maintain 30%, 33% of the deal. Remember, you can always run two funds in parallel. And I think as a small shop, the larger your deal is, nobody cares who is signing the guarantee paper on the back end. But by associating yourself with that, I think it could create more credibility with other family offices, because now your co-investment partner is XYZ. So I've seen that works very, very well. And I think that's part of why we took this hybrid approach to offer both. But we would partner on the capital stack. And then you can always create as many class of shares that you want to create, as long as they can provide what they call a sliding scale. If a family office says, okay, well, my minimum investment is 50 million, that's great. That's not a problem at all. We can create a separate class of shares for you, and you'll be the co-investment partner. But would you also be signing off of the loan? Because you need someone with the balance sheet to be the loan guarantor or the key principal. And if they said yes, that in itself just open up 100-fold more opportunity for you. Because down the road, if you perform really, really well, then they will give you more control as you go.
Okay. Yeah, that makes a lot of sense. I appreciate that. Thank you.
No, I think that's a really smart idea, because you're at the end of the day, you're leveraging somebody else's name to be able to break down all these barriers, and then it will help, because obviously it's an introduction thing. So I mean, people are just mentioning somebody's name that's already inside of the situation, inside of the deal. Then you're not going to get any, it's not my mandate emails. You're going to actually get responses. So I mean, that's another thing to consider.
Yeah.
Got it. Yeah, the market is tough. It's just a matter of, like, I guess it's just, if it balances out with what the end goal is, then then hopefully that will work. So let me sign off. I think this has been a good one. Everyone seems to have everything here. But yeah, I'm just going to, so next steps, I'm going to send Abdiel and Ken the documents. I'm going to send Ade some names as well, and some additional information based on the campaign, and then we'll just continue to work and go from there.
Sounds great. Thank you.
Thank you, gentlemen. Thank you.